Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we are diving into a report that is juicier than most. This one has mergers, acquisitions, changes of hands, and of course money at stake. It is a roller coaster. We're looking at PUTNAM VT High Yield Fund's annual report. The fund invests in what are called high-yield or junk bonds, which are basically riskier corporate debts that pay out more than safer investments. For the year ending December 31st, PUTNAM is giving us all the details on where they stand and what changes they have been going through. First, let's talk about costs. Every fund has expenses, and it is important to know what you are paying for when you are investing. For Class IA shares, for every $10,000 invested, the costs were around $76, representing 0.73%. For Class IB shares, the costs were a bit higher at $102, or 0.98%. These numbers do not reflect expenses from investments through variable annuity or life insurance products, so keep that in mind. Now let's check performance. Class IA shares returned 8.19%, while Class IB shares returned 7.86% for 2024. To give some context, the report compares these numbers against the J.P. Morgan developed High Yield Index, which saw 8.68% return over the same period. While the fund did well, it underperformed in comparison. What drove these returns? The fund benefited from good choices in the financial sector and gaming areas. Plus, they made money from convertible bonds and being underweight on BB-rated securities, which were more conservative. Their bet on Viking cruises also paid off. On the flip side, selections in cable, satellite, and underweighting healthcare dragged down performance, as well as selections within B and CCC-rated securities, which are riskier bets. Embark Corp being overweight also did not work out for the fund. Past performance does not predict future results, but seeing the long-term view is always useful. An investment of $10,000 in Class IA shares back in 2014 would be worth $15,524 at the end of 2024. The same investment in Class IB shares would be worth $15,161. Breaking down the numbers on average annual returns, Class IA saw 8.19% in 2024, 3.63% over the past 5 years, and 4.5% over the last 10 years. Class IB did slightly worse at 7.86% for 2024, 3.38% for 5 years, and 4.25% for 10 years. Again, the J.P. Morgan developed high yield index beat them all. As of the end of 2024, the fund's total net assets were about $146 million, spread across 445 different holdings. Around $800,000 was paid in management fees, and the portfolio turnover rate was 50%. This means the fund sold and replaced half of its investments during the year. Where was all that money invested? Corporate bonds and notes made up the bulk of the portfolio at 83.8%. Senior loans represented 7.2%, and convertible bonds were 1.9%. Those high-yield bonds were focused on energy and oil, financials, capital goods, or items used by companies to produce things and communication services. Now for the interesting part, the changes. Franklin Resources, which is Franklin Templeton, bought PUTNAM Investments. Because of this, in January, PUTNAM Investment Management, the old investment advisor, and PUTNAM Investments Limited, the old sub-advisor, both became part of Franklin Templeton. Then in July, PUTNAM Management basically handed the management of the fund over to Franklin Advisors. All the portfolio managers and analysts made the switch too, but things didn't stop there. In November, PUTNAM Investments Limited, which was already a sub-advisor, got merged into Franklin Templeton Investment Management Limited. All those folks became Franklin Templeton employees too. The trustees also approved a new sub-advisory agreement between Franklin Advisors and FTIML. Basically, it is like one big family getting even bigger and more connected. Finally, the report also notes who is calling the shots for the portfolio. As of September, Robert Salvin, Norman Boucher, Bryant Diefenbacher, and Glenn Voiles are the portfolio managers for the fund. If you're looking for even more details, you can check out their website for the prospectus, proxy voting information, financial info, and all the other good stuff. The fund's books were checked out by PricewaterhouseCoopers LLP, which is the accounting firm. They gave the fund a thumbs up, saying the financial statements are fair and in line with accounting rules. Here is a more detailed breakdown of the portfolio, which is required to be public. The major component of the portfolio is corporate debt of different kinds, amounting to over $120 million. It ranges from marketing services to automotive and broadcasting companies. The senior loans component amounts to around $10.5 million. The convertible bonds amounts to about $2.75 million. Looking at the hard numbers, at the end of the year, the fund had assets worth almost $147 million. After subtracting what they owed, the fund's net assets came out to around $146 million. That year's revenue totaled about $10.2 million due to interest, partially offset by about $1.1 million in expenses. Overall, the fund's net assets increased by about $11 million due to operations. Auditing the funds is quite pricey. For 2024, the auditor received $73,862 for audit fees and about $8,000 for tax fees. However, the total non-audit fees were in the range of $800,000. Lastly, the big bosses are saying that the company's internal controls are working well. They believe the fund is handling its financial reporting correctly and on time, at least at the time of this filing. So, what is the story here? This report shows a fund in transition after a major acquisition. The fund performed okay, but it could have done better. The change in management, which was seamless, could lead to higher returns as they consolidate. On the other hand, there is a risk. Combining different work cultures, if the transition from PUTNAM to Franklin is not handled well, there could be some disruptions and the fund may suffer. Overall, PUTNAM VT High Yield Fund has a decent risk-reward profile. Just be sure to keep an eye on those management changes to make sure all continues to go smoothly. Thanks for watching. If you found this breakdown helpful, hit that like button, drop a comment, and subscribe for more corporate deep dives.